Stop listening to their lies. The collapse is not a future event. It is a recurring betrayal. They have already sacrificed your savings. They did it in plain sight. Remember 1971? 6 years before Nixon finally killed the gold standard, the paper dollar had already lost half its value against gold. That was the hidden tax of a dishonest system. That was the political surrender to unmanageable debt. This is the cycle. This is the pattern repeating now. A desperate, calculated move. It is designed to mask the structural insolvency they created. They print the money. Your future pays the crushing price. Right now, the Federal Reserve is signaling surrender. They are whispering about rate cuts. They call it a policy shift. We call it the cyclical, inevitable collapse of the currency. December 2023 was the official breaking point. It was the pivot. The central bank formally admitted they have run out of options. This is the precise moment of maximum danger. The historical pattern is a siren alarm. The next asset to shatter is the US dollar itself. The ultimate safe harbor, the asset the banks fear most, is about to become unavoidable. This is the cold, brutal logic of history. It is focused entirely on silver. Listen closely. The clock is running out. The illusion of stability is the most potent weapon. It is held by those in power. We are not dealing with random economic events. We are observing the predictable execution of a systemic logic. The mechanism is brutally simple. A government promises benefits it cannot afford to pay. It funds that promise, not through honest production, but through reckless debt accumulation. The central bank then steps in. It monetizes that debt. This inflates the currency supply. It fundamentally devalues your savings. This is the unwritten rule. This is the inflation cycle. It is a pattern older than any central bank. Look at the history. Look at the ancient failures. The truth is never new. Consider the Roman denarius. This is the first lesson. By 260 AD, the silver content of the Roman denarius had been diluted dramatically. It dropped from near 100% to less than 0.5%. This was not an accident. This debasement was the direct consequence of perpetual war. It came from unsustainable social spending programs. They simply removed the metal from the coin. They had to fund the empire's broken promises. When the silver was gone, the empire followed soon after. The currency dies first. This is the first recurring mechanism. The value is silently removed. The crisis then becomes immediate. Now fast forward to the 20th century. The system became more complex. The corruption became more subtle. The Federal Reserve was established in 1913. The declared purpose was to provide an elastic, flexible currency. The true purpose became the mechanism to enable unlimited government borrowing. The systemic stress began immediately after its creation. In 1913, the U.S. national debt stood at roughly $2.9 billion. This was the clean starting line. By the end of World War I, that national debt had ballooned to over $25 billion. Colossal, rapid surge in borrowing. The gold standard still held a leash on the system. The Fed had to honor the convertibility promise. That promise kept the system relatively honest. It was a constraint the political class hated. The 1930s were the system fighting against its own rules. President Roosevelt issued Executive Order 6102 in 1933. This order made the private ownership of gold illegal. This was the first major, violent act of currency control. It was a political move. It centralized the physical asset. It forcefully delinked the paper dollar from its physical foundation. They reset the price of gold overnight. It moved from $20.67 to $35 per ounce. This was an instant, non-negotiable 70% devaluation of the paper dollar. That devaluation was the first major theft from savers. It should have been the final warning for every citizen. The true, final betrayal came in 1971. The government had run two massive deficits. The cost of the Vietnam War and the spending on Lyndon B. Johnson's Great Society programs created an unmanageable fiscal hole. Foreign central banks started getting nervous, primarily France. They began demanding physical gold in exchange for their excess paper dollars. The Bretton Woods system was collapsing under the massive weight of American debt. Nixon did not close the gold window for economic freedom. He did it to stop the catastrophic drain on the National Gold Reserve. They were running out of metal to cover their lie. On August 15, 1971, the system of monetary discipline officially ended. It died quietly on a Sunday. The US dollar became a pure, faith-based fiat currency. The only thing backing it was the government's promise. The second mechanism was now fully operational. The political promise was the new backing. The immediate consequence was the great inflation of the 1970s. This was not complicated. It was cause and effect. From 1971 to 1980, the price of silver skyrocketed. It moved from around $1.40 to a peak near $50 per ounce. A relentless, dramatic, and violent rise in price. This was not just speculative madness. It was the market responding with brutal, cold logic. The anchor was removed. The metal was screaming the truth about the currency's lost value. The central bank had to take extreme measures to regain control. Volcker's crushing interest rate hikes peaked near 20% by 1980. The pain inflicted was astronomical. The panic was very real. The historical trend is immutable. Every single time the fiat currency system approaches insolvency, the central bank is forced to make a choice. They choose the government's solvency over the dollar's purchasing power. The metal always responds. This is the uncoercible logic. The late 2000s gave us another painful refresher course. The 2008 financial crisis saw the Federal Reserve deploy quantitative easing, QE, for the first time in history. They exploded their balance sheet. They did this to rescue a failed banking system. The government's response to the Great Recession saw the national debt surge dramatically. It went from roughly $9.6 trillion in 2008 to over $14 trillion by 2010. This was the exact moment the central bank officially became the lender of last resort. It became the buyer of first resort. In 2011, silver peaked again. It hit nearly $49 per ounce. This was the direct, cold, mathematical consequence of the Fed's first massive QE program. The market was correctly front-running the inevitable debasement. The pattern is absolute. Unprecedented money printing is always followed by a dramatic revaluation of physical assets. The only difference this time is the sheer, unthinkable scale. We are not facing the same crisis. We are facing a crisis many times more profound. The underlying structure has been completely hollowed out. The reserves are not there. The promise is fundamentally broken. This history is not just a compelling story. It is the exact playbook for the next, and potentially final, phase of systemic failure. The price of silver is simply the unit of measure for the abject failure of the central bank. It is the clock counting down the dollar's life. We are now standing at the edge, the precipice of the third, most violent phase. The December 2023 Federal Reserve pivot is the final confirmation of this recurring mechanism. The Fed did not cut rates yet. They only said they would. That admission, that signal, is a total capitulation. It shows that managing the ballooning interest expense on the national debt is now the absolute priority. It is more important than fighting the persistent, deeply embedded consumer inflation. The current U.S. national debt has now surpassed an unthinkable $34 trillion. This is our third shock number. This staggering debt represents an increase of over 1,170% since the 2008 crisis. This number is the unpayable promise. It must be addressed by printing, cannot be addressed by payment. The only way to deal with a debt of this crushing magnitude is to make the currency units used to measure it worthless. Inflation is the soft, silent default. The structural fragility is visible everywhere you look. We have an inflation rate that has officially averaged over 3% since 2021. This number is a political lie. The BLS reported CPI numbers are fundamentally understated. Your household budget proves the deception. The American consumer is being slowly, systematically crushed. But the Fed cannot keep interest rates high. Why? Because the annual interest expense on that $34 trillion debt is now approaching $1 trillion annually. This debt service cost alone will soon consume all discretionary government spending. The budget is functionally bankrupt. The central bank is trapped in a classic vice. If they keep rates high, the government goes functionally insolvent. If they cut rates, inflation violently accelerates and the dollar collapses faster. The pivot is the choice. They chose the dollar's accelerating destruction. They chose to fund the government's reckless spending. They chose the political path. Silver is uniquely positioned for this collapse. It is not just a monetary metal like gold. It is an industrial critical metal. The entire global energy transition hinges on silver. Solar panel production requires immense amounts of silver. Electric vehicles, high-tech industrial electronics. The demand is relentless. It is structural. It is non-negotiable. The supply, however, is finite. Global silver supply has been in a sustained, undeniable deficit for 3 consecutive years. That is the 4th shock number. The world is consuming significantly more silver than it mines. This structural deficit is not speculative noise. It is pure mathematics. The physical inventory worldwide is being rapidly depleted. It feeds this massive industrial demand. This leaves almost nothing for the massive investment demand that is about to surge. This specific mechanism is different from 1971. Back then, silver was primarily only a monetary hedge. Now, it is a monetary hedge and an industrial necessity. The coming supply shock will be violently magnified by the inevitable demand from all investors. They will be desperately fleeing the accelerating destruction of the fiat currency. The price action immediately after the December 2023 pivot was an early, critical warning. The market understood the signal. The government requires a massive, coordinated inflation event. They need to lower the real burden of this debt. They cannot say it publicly, but the market is pricing in the outcome. This is the sophisticated, modern mechanism of collapse. The central bank manages the crisis under the guise of an economic soft landing. The truth is much colder. They are simply emptying the vault into the economy. The historical pattern is a closed loop. It is a sealed fate. The currency must ultimately die so the state can financially survive. The price of silver will become the final, most brutal obituary for the US dollar. The 2023 pivot has set the stage. This is the final act of this recurring historical drama. As the Fed begins to cut rates aggressively, not to stimulate the economy, but to save the government's sinking balance sheet, the stored energy of the past decade's money printing will be violently released. The final systemic shock will occur. This shock happens when the market finally realizes the Fed has truly lost control of inflation. That realization is now absolutely, mathematically encoded into the system. Cannot be undone. The consequence is specific and catastrophic. The real value of the dollar will collapse. This will happen in a compressed time frame. A process that took decades in the past will now take mere years. The flight to all tangible assets will be violent. It will be extreme. Gold will perform its historical function as the ultimate monetary hedge. Silver, however, will face a dual demand shock that gold cannot possibly match. This makes silver the more explosive play. The final structural element is the leverage within the banking system. The commercial banks hold a net short position in silver futures. This is the 5th and final shock number. This massive short position means they are aggressively betting that the price of silver will fall. This is a massive systemic error. When the irreversible industrial demand collides with the massive investment demand from a fleeing, panicked public, these short positions will be violently forced to cover. The resulting short squeeze will be explosive. The physical supply is already critically constrained. The paper market leverage is the accelerant being poured onto the fire. This is not just a rise. This is a detonation. By 2026, the structural fragility of the system will be fully, irrevocably exposed. The current fiat experiment will be in its final, panicked phase. We factor in the historical pattern of the 1970s. We factor in the 2011 surge. Crucially, we add the irreversible factor of current industrial demand. The mathematical logic is compelling. The The price of silver will not simply rise to its past inflation-adjusted high. It will be bid up aggressively as a dual necessity. It is monetary. It is industrial. The target of $100 plus for silver by 2026 is not a hyperbolic fantasy. It is the simple, cold, mechanical consequence of an unpayable $34 trillion debt. This debt is being monetized into existence. This is compounded by an inescapable industrial supply shock. This is the kind of information that should fundamentally change how you view your security. The disaster has been coded into the financial system. This is your final warning. This video explains historical and economic systems. It is informational, not financial advice or price forecasting. The cycle is absolute. The recurring mechanism is now fully engaged. The central bank has pivoted. They acted not out of careful wisdom. They acted out of cold, hard necessity. They have chosen the political illusion. They have abandoned the integrity of the currency. The logical consequence is the violent, sudden revaluation of the only assets they cannot create with a keyboard. The history is absolute. The future is mathematical. The promise is political. The consequence is mathematical. No one escapes. If you want to understand the cold logic behind the headlines, if you want to track the systemic stress points others ignore, subscribe now. We decode the past to understand the inevitable future. Join our membership for deeper, time-sensitive analysis you won't find anywhere else.